Hello and welcome to the show. So, this presentation is called Metamaterials, The Future So Bright. I'll let you fill in the rest. So let's get the legalese out of the way first. This is not financial advice. I am not a financial advisor. This information is intended for entertainment and educational purposes only. So, we recently saw a really cool video that came out of Sterling Stocks. And here he's got Ken Rice, who's the CFO of Metamaterials. He's talking to Sequire or Carmel Fisher. And he says, according to the byline, we're not done. He's expecting $5 billion yearly from one single application. It works. So let's hear what let's hear what he's saying.
We focus on producing functional films that have nano patterns on them that cause light, radio waves, electromagnetic waves, and other forms of energy to behave differently than they do in nature. So if you've heard of the Cloak of Invisibility in Harry Potter, we can replicate that.
No way.
Yes.
Tell me more.
That we are now a very different company than we were a year ago. When I joined in December, the market value of Meta was $30 million Canadian. Today, it's 1.6 billion US. That's a very different world, a different kind of company to run. So we're very excited about the new people, and we're not done. Applying these patterns to these functional films, and then working with our customers to identify applications that are important to them. And so one could look at this as being driven by a number of megatrends in the industry. I'm sure you're familiar with 5G telephones, except if you have one now, it's probably 4G,
right?
Even though they say it's 5G. That application alone is probably worth $3 to $5 billion a year. We're working with a very large chemical company in Japan called Sekisui. They approached us about a year ago, and they said, we want to work with you. We have a very large telecom company in Japan as our customer, and the way they describe it is they basically want to enshroud the whole country of Japan in our film.
They want to enshroud the entire country of Japan in the Metamaterials film, and that could be worth anywhere from $3 to $5 billion. At one particular application alone. Very interesting. So what does that mean to the stock price? What does that mean to the share value, right? So that's what this video is attempting to explain. So what we're going to do is we're going to look at the Form 10Q, and from the Form 10Q, we're going to look at the earnings statement, and we're going to build a financial model out of that. So in the earnings statement, we're just going to look at the last 3 months, ended June 30th. This is from the Form 10Q for the June 30th of 2021. So this does not include the nanotech acquisition, and it does not include data after the Torchlight merger. Right? So we take the items from the earnings statement and we form a spreadsheet out of it. The reason we do that is that we'll be able to replicate the financial statement and modify it to our heart's content. Okay. So I've aligned up various portions of the financial statement with the spreadsheet, and basically I'll just go over it very briefly. Right. So there's two sources of revenue: product sales and development revenue. Add them up, and you get the total revenue. The cost to actually generate that revenue is subtracted, and you get the gross profit. The next line items are with regard to operating expenses. Add up all the operating expenses, and you get about $5 million of total operating expenses, right? The next couple lines are other income, or in this case, other mostly expenses. There is one income in there, but You add up all those line items, which are forex gains or losses, gains or losses from financial instruments, other income, and you wind up with the total other expenses of $784,000. Okay. So add up the total other income, the total operating expenses, and combine that with the gross profit, and you wind up with an income before taxes, or in this case expenses before taxes, of about $5.239 million. When you deal with taxes, you wind up with actually getting some money back here, because no profit was made, and so the net gain or loss in this case is decreased slightly to minus $5.181 million. Turns out there are some other gains that you can throw in there, which are foreign currency translations and fair value gain or loss in this case, or gain or loss from changes in credit risk. Add up those two values, and you wind up with an additional $96,000. When you add the $96,000 to the loss of $5.181 million, you wind up with a comprehensive loss in this case of $5.085 million. At the time that this Form 10Q was filed, there were 197 million shares. So split that 5 million across 197 million shares, and you wind up with a loss of about 3 cents per share. Now, why did we do all this? We did all this because we now have a model that we can just replicate and experiment with. So we're going to throw some other line items into our spreadsheet, and now we can estimate what earnings could be based on additional revenue. So we'll just copy the Form 10Q data again. So we'll use that as our starting point, our basis, our baseline. First thing we'll change is the number of shares. We know that we have 281 million shares, so we need to modify that. The whole purpose of this model is to test out what happens if we have $5 billion of revenue. So $5 billion of revenue a year works out to about $1.25 billion per quarter. So we add that to our product sales. And then the cost to generate that $1.25 billion in revenue, we'll say that there's a gross margin of about 50%, which means it'll cost about $625 million to generate $1.25 billion of revenue. Finally, when you're making money, you got to pay some taxes. We'll just say that we're going to pay taxes at a 39% rate. And when you're making that amount of money, you can probably incur a bunch more expenses. You can add more people. You can start spending money on selling and marketing. You can start doing, add more G&A, add more general and admin. So in this case, we'll just throw in about $100 million each, right? When you do that, you wind up with 91 cents per share of earnings. But that's per share per quarter. So let's see what that works out. That's 91 cents per share per quarter. That works out to $3.64 per year, because there's 4 quarters in a year. With a PE ratio of 25, that implies that you can get a projected share price of $91. Not bad. So now that we have our model, we can start playing with it and see how sensitive our model is to various other things. So let's say that our gross margin drops from 50% down to 40%. That means that our COGS cost has increased slightly. If that happens, we can see that we'll wind up with a smaller amount of earnings per share per quarter. This works out to about 64 cents per share per quarter, which results in a projected share price with a PE of 25 of $64. Now, you don't have to have a PE of 25. You can have a PE of 40, say, because if you're a rapidly growing stock, you'll probably have a PE that is a little bit higher. And with a PE of 40 and a gross margin of 40% or so, that means that you're in the range of $100 to $2 per share. Again, not bad, not bad. So we can play with this as much as we want. You can replicate this spreadsheet also. It's pretty straightforward. So $5 billion of revenue from one application, as the video states, can result anywhere from a $60 to $100 share price for Metamaterials. And that's a few years down the road, but again, it's just one application. So suppose they get multiple applications down the road. And this doesn't even include the nanotech acquisition and the revenue stream from that, which should be coming in soon too. So with that, looks like the future really does look pretty bright, and I think we gotta wear shades. So that implies that the stock will become very valuable. So how many shares are there available out there in the world that you can actually buy, right? There are 281 Metamaterials shares outstanding. Those shares were issued by Metamaterials themselves. Insiders, however, have about 3/4 of the shares. They have about 213 million of the 281 million shares. Turns out that also institutions in the last week or so have been started to buy Metamaterials stock like crazy. We now have 210 institutional owners, which, if you were to add up all of their positions, works out to about 36 million shares that are being soaked up right now. So with 281 million shares, subtract the insiders, subtract the institutions, you wind up with 31 million shares left. That's all the shares that are left to buy. So I think stock itself probably has long-term excellent price potential. Insiders own 75%, which is always a good thing. And there are very few shares available as a result. So we could see a potential squeeze coming up. We could see all sorts of things happening. But in either case, the future seems pretty bright for Metamaterials. So I'm going to conclude the video. With that, I'm going to end by saying this is not financial advice. I'm not a financial advisor, and this information is intended for entertainment and educational purposes only. Good night.